Looking at the markets overnight, the S&P 500 and Nasdaq closed at multi-week lows as lackluster earnings from Tesla and Alphabet undermined investor confidence in mega-cap tech names that had previously driven this year's equity rally. Locally, the rand is weaker ahead of U.S. economic data readings that could give hints on the future interest rate path of the world's biggest economy. Markets await a U.S. GDP reading due this afternoon and personal consumption expenditure data, the Fed's favored measure of inflation, that will be out tomorrow. This will be a crucial test for ongoing bets of an early start to Fed rate cuts after the recent trend of easing inflation and some weakness in the labor markets. Like other risk-sensitive currencies, the rand often takes its cues from global factors in addition to domestic drivers. Looking at the all-share index, down 0.9%. Financials, industrials, as well as resources are also in negative territory, with the resources taking the lead there, down 2.6%. The rand is trading at 18.47 to the dollar, 20 rand 5 cents to the euro, and 23 rand 81 to the pound. To give us more perspective on the markets, we are joined by Mohammed Wagley, who is the portfolio manager at Sasfin Wealth. Mohammed, thank you so much for your time. So it's quite interesting. We're waiting for that GDP print, yet at the same time, we're still trying to digest what's going on over in Wall Street with this rotation, with some of the small caps also getting a little bit of some love. Not sure if it's sustainable or not, but what do you make of market sentiment right now?
Yeah, well, there's been quite a few things, driving markets over the past week or so. Quite a bit that's been happening in the States, So you did touch on this earlier. I think really the main thing has been the disappointing earnings that we've been seeing from some of the tech companies. Now, you did note Alphabet and Tesla, and those were the two that we got earlier on in the week, and they did miss on guidance, and it really was quite negative. And I think those disappointing earnings, coupled with, drawbacks from market corrections, have really weighed on the JSE. But, we've not been sort of alone in that respect. I think globally speaking, it's quite weak. You mentioned this as well, but yesterday was quite bad for the S&P 500 and the Nasdaq as well. Now, in addition to that, with reference to the local market, we did also get SA's inflation numbers yesterday. Did see a bit of a drop there, and I think what really happened is, look, we're not quite at the 4.5% midpoint of the target range, but the drop did serve to sort of reinforce that narrative that, we may see a rate cut soon, probably as soon as September, following on from when we expect the US to cut their rates. And then you mentioned just in terms of the rotation to small caps, I think much has been made of the Trump trade and, the increases that we're seeing in the Russell 2000 small cap index. In essence, what's really going on here is we're seeing investors take a bit of profit on their tech positions and then move into the small cap space. I think the logic here is that, those smaller companies are expected to maybe disproportionately benefit when those rates do start to come down. I will note, though, it does seem like this was short-lived. If I look at the performance of that index, yes, it was also down 2.5%. So perhaps an opportunity for some of the traders to make a little bit of profit there, but definitely not a long-term thing, at least in my view.
All right, so let's bring things locally for a bit and talk about what is going on in Quantum Foods and a Country Bird. Some have called it the poultry war, and this is as Quantum Foods, which is the largest shareholder, rather Country Bird, which is the largest shareholder for Quantum Foods. They are requesting an extraordinary general meeting, and this is to remove the chair as well as the lead independent director. But one of the things they cite as a reason for calling this EGM is the poor performance and the strategic direction when it comes to Quantum Foods. When you look at Quantum Foods as a share in terms of performance, even given some of the numbers they may have put out over the past year or so, what's your sense of the trends there?
Quite interesting. So just in terms of performance, I've got to sort of paint a picture of, last year they were hit by the avian flu. Obviously, that put quite a bit of pressure on their numbers. And then within that context, they are coming off, quite low bases. So they've actually seen quite a bit of improvement in their margins and just sort of general business condition. And if I look at the share price year to date, they're up over 130%. Now, one thing to note, though, that it isn't just sort of organic growth. There's been quite a bit of a shakeup in terms of their shareholding this year, So I guess the news that you make reference to is quite acrimonious, but is not necessarily new. This also follows, a legal challenge that they're facing. They've got a former director accusing the company of allegedly firing her after she asked to see a legal opinion on which the group relied to deny a shareholder meeting. I think that was their second largest shareholder. So there's definitely a bit of acrimony. I think poultry war is quite funny, but it's really apt, and I would attribute a lot of the performance that we've seen there to, that shake-up. In fact, earlier in the year, Astral, which owned about 10% of the company, disposed of that. And then I think Country Bear, who actually had about 6.5%, actually went and picked up those shares. They're probably sitting at close to 17 odd percent now. So lots of movements there behind the scenes. And I think that's really what's driving performance. I mean, I got to note there is some organic growth, but I think it's really the shake-up there with the shareholders that's been driving performance.
Another SENS note came out of SPAR, and they're saying that the negotiations with regards to the Polish exit is reaching an advanced stage. So SPAR's fascinating for me because many South African companies have done well in Eastern Europe, except for SPAR. And then they had the IT issues, which were the gift that keeps on giving. What do you make of SPAR?
I think you're being very, very generous there. So yeah, look, we got the cautionary this morning. I didn't think it was sort of anything new in terms of the actual information that came out. Basically, what they're saying is they're well on their way to disposing of their Polish business. That's going to happen sort of imminently. Shareholders advised just to exercise caution. We could see a bit of movement there on the share price. What they're going to do with that money, that actually frees up, if I'm not mistaken, about R500 million, and they're going to look to use that towards their sort of local businesses. Looks like the market's reacted relatively well to it, but again, this isn't anything new. So a bit of a muted response. Last time I checked, they were up about 0.65%, but ultimately a step in the right direction. You mentioned, look, other retailers did have success in that respect, but pretty much right off the bat, SPAR really weren't seeing results. And when COVID happened, and then obviously the war in Ukraine, and that served to just put even further pressure on their sort of offshore exposure. So good to see that they getting out. Ultimately, the focus then shifts to their local exposure and how they can sort of use those funds to address issues that we're seeing. And truth be told, I don't think we've seen sort of the exact extent of it. If you look at some of the other retailers and how they've suffered locally, right. I think in a sense, SPAR's perhaps been a bit insulated in that regard.
All right, Mohammed, thank you so much for your time. That is Mohammed Wagley, who is a portfolio manager at Sasfin Wealth.